This is Horizon's Middle East and Africa, our top stories this morning. Bitcoin tops $81,000 for the first time on optimism about Donald Trump's embrace of digital assets and the prospect of a crypto-friendly U.S. Congress. China investors disappointed with the $1.4 trillion debt swap program. Foreign firms pulled $8 billion out of China in the third quarter, a sign of pessimism around Beijing's stimulus measures. And this year's climate conference will see a new global goal for climate finance. We are live at COP29 in Baku as Donald Trump's victory promises to shake up U.S. energy and environmental policy.
And it's just gone 8 a.m. across the Emirates. It's 3 p.m. here in Sydney. I'm Paul Allen in Sydney, in for Jemana Bezetchi.
That's right. And I'm Jennifer Zabasacha in Johannesburg, where it has just gone 6 a.m. Good morning to you, Paul.
Yeah, it's a good afternoon here. Let's take a look at how we're tracking on markets at the moment. A few things we're keeping an eye on. I mean, one of the stories at the moment is Bitcoin. It did briefly crack 81,000. Of course, Donald Trump has pledged to make the United States the crypto capital of the world. There was discussion on the campaign trail about a strategic Bitcoin stockpile, the possibility as well that we might see some crypto-friendly regulators once he is sworn in January as well. So Bitcoin rallying hard. Also higher, we've got S&P futures, better to the tune of about 0.1%, although there won't be any trading in the US today, closed for a market holiday. It is Veterans Day. The bond market's another thing we're keeping an eye on. We've got futures trading there at the moment. We've got BlackRock, JP Morgan, TCW Group, among others, warning the bond market sell-off is likely not done yet. Of course, we have also heard on the US campaign trail about President-elect Trump's plan to cut taxes, impose tariffs. All of this could be inflationary, lead to higher deficits as well, and therefore higher yields. We've got swaps traders pricing in fewer cuts from the Fed going forward. We've also got CPI and PPI data coming out of the US this week. Brent crude, though, holding pretty steady right now, 73.62 a barrel. Let's check in on how markets in Asia are faring. Avril Hong's in Singapore. Avril, what are you watching?
Yeah, Paul, we're seeing how Asia's markets are really negative today, and the drag is coming from the Hang Seng that's underperforming. The Chinese tech names are the ones that are the key drags on the region's benchmark, and this is against the backdrop of China's NPC disappointing. But it's interesting, if you look at the mainland, the info tech names as well as telecoms names, you're actually seeing them clocking some gains. And to some, this actually speaks to the sense that the recent performance in stock markets is more of a speed bump, and this is after a lot of momentum has already been coming into markets on the mainland. Something to keep in mind as we see these losses in stock markets. The rest of the region also looking pretty negative, including in South Korea. Bonds in China, though, catching a bit, guys.
Avril Hong in Singapore for us. Avril, thanks so much. We will check back in with you in a bit. Let's stick on China, though. China has announced a $1.4 trillion lifeline to help local governments deal with hidden debt, but stopped short of unleashing new stimulus. Our China correspondent, Min Min Lo, joins us from Hong Kong. So, Min Min, give us the details of this stimulus package that was announced by China's top legislature.
Yeah, the main piece of this fiscal package is really that 10 trillion yuan in debt resolution, 6 trillion yuan coming from special local government refinancing bonds that will be spread out over the next 3 years, plus another 4 trillion yuan that will come from the regular quota of local government special bonds over the next 5 years. And according to the Finance Minister Lan Fo-an, he said that this will reduce China's local government hidden debt by about 12 trillion yuan by the end of 2028, and it will save local governments about 600 billion yuan in interest payments. These would be cash that local governments can then inject as investment into the local economy or just pay the civil servant salaries that they have owed so far. But I think what markets have been very disappointed by is the lack of other additional stimulus, or at least a number that is tied to property sector support as well as direct consumption support.
So we've heard a few things in advance of this. Is this in line with expectations so far?
I mean, if you look at how the stock market has been performing before the lunch break, we did see a pullback in Chinese stock markets, especially in the Hong Kong markets as well. But that is somewhat understandable given that markets had priced in very aggressive stimulus so far. And it seems like the government is sort of waiting to unleash further fiscal firepower. They're waiting to get more clarity from Trump's administration in terms of their policy on China, because we did get forward guidance from the NPC Standing Committee suggesting that the government will unleash a more forceful fiscal policy in the next year, that they plan to raise the fiscal budget deficit. They want to increase central government fiscal transfers to the local governments and also expand that equipment upgrading program as well. So perhaps more of the stimulus will be coming in the next couple of months. In December, that Central Economic Work meeting, that's something that's key to watch.
All right, China correspondent Min Min Lo there. Asian shares slipped after China's planned debt swap program looked insufficient to some investors. Elsewhere, as I mentioned, Bitcoin surged past $81,000 for the first time, driven by the incoming president's support for digital assets. With that in mind, let's bring in Katrina now, Director of Economic Research at Moody's Analytics. And Katrina, we just heard Min Min there explaining how China's finance minister is looking to more forceful fiscal policy next year. Do you get a sense that they're keeping some powder dry ahead of the incoming Trump administration and the likelihood, possibility of another trade war?
I mean, it does seem that way. I mean, the Trump 2.0 does bring a lot of uncertainty, but also a lot of downside to China's growth projection, because basically, Trump has said, I'm going to be really, forceful when it comes to implementing tariffs on China. And China is really the one that Trump has been focusing on in particular. But I think as well, when we're looking at China and China's stimulus, we need to keep in mind that, it seems like for the longest time post-COVID, we've been continually hoping and expecting that the next round of stimulus will, make meaningful improvements in China's basically underwhelming growth. And that just hasn't happened yet. And now it looks like, we'll be waiting for the next fiscal package, which they've promised will be more forceful. But I mean, at this point, it does seem that we need to perhaps lower our expectations on how forceful that next stimulus package will actually be.
Katrina, when you talk about expectations, I mean, what then does that mean for your expectations for growth in the Chinese economy in 2025? We've seen some people revise it down just given Trump's win. I mean, I wonder now, considering those factors you just pointed out, are you potentially going to revise down your expectations?
Yeah, it's a really good question. So at this point, we have maintained our forecast. We're looking at about 4.7% next year. But that's really predicated on the fact that we haven't factored in this Trump 2.0 tariff policy and how global trade is expected to be meaningfully impacted going forward. I mean, at this point, we just don't know how forceful, how aggressive, and the timing around these tariffs that Trump has proposed will be on not only global trade, but particularly China. And we need to remember as well that for China, a lot of their growth over the past year has really come from the manufacturing and export engine. And so if that's threatened, looking inward to domestic demand becomes even more important. So it does really put more of the stimulus onus on them finally kind of lifting the consumption picture.
Of course, it's not just China. There's a number of countries that are potentially in President-elect Trump's crosshairs. I'm thinking Japan will be another one and the Eurozone another. What sort of impacts do you see these tariffs having on those economies?
I mean, at this point, it's the uncertainty seems the name of the game, but it does certainly pose downside risk, particularly for, Japan, which has really struggled over the past year. And the expectation was for Japan as well as for the Eurozone that both of these economies would enjoy a stronger 2025. For the Eurozone, it would have been coming on the back of the fact that they've got easier monetary policy settings. But for Japan, the expectation was that they'd finally get sustained real wage growth that would finally reinvigorate the Japanese consumer. But now with that Trump threat looming, it really does throw a spanner in the works and a whole lot of downside risk about that expectation that 2025 would indeed be a better year.
And Katrina, I wonder, when we think about the Fed, we did hear Jerome Powell field a number of questions about the president-elect last week. But the focus really, he says, is on data dependency. I mean, is there any certainty potentially that we could get from upcoming data? We'll get some U.S. data this week that could potentially direct the path that the Fed will take. I mean, is there anything that can be certain for sure in this very uncertain time? I think that's fair to say.
Yeah, of course. I mean, what we can continue to be guided by is the data. Of course, that's the kind of one, key thing that can continue to forge the most appropriate path, right? So we'll continue to look at inflation, continue to look at the labor market, including the forward indicators of the labor market, and that'll tell us exactly how that disinflation path is kind of progressing. And at this stage, the tariffs that have been proposed and the various tax cuts on corporates and US individuals as well, that it's going to take time for them to take effect. So within that, the kind of next couple of months, the disinflation path should at least be more entrenched, which is a positive thing, certainly, to take away from all this.
Yes, and Fed Chair Powell did say that the path could be bumpy. He's not going to be too concerned if we see a couple of outlier reads, and we do have CPI coming out from the US later on this week as well. But if we take a look at the policies that are coming down the pipeline, I mean, already we see yields rising. We see traders trimming their bets on expectations around Fed cuts. Have you changed your view on what we might see from the Fed in 2025?
So near term, our policy really does remain consistent with what it was prior to the Trump elect. And it's really that we will see about 100 basis points worth of reductions at this point next year. So that's continuing to support the US economy. And I think that an important positive going into this is the fact that the US economy is maintaining that resiliency. And so, because it is maintaining that, it means that the Fed doesn't need to rush when it comes to normalizing policy, and any, potential inflationary impacts coming from the various Trump policies that have been proposed will take time to manifest as well, and they will be slow. And so the hope is as well that then the Fed won't need to change its course too aggressively during that path.
So, Katrina, then what is next for you in terms of looking out for what we could potentially see directing the volatility or lack thereof, I guess, within the markets?
I think it's really waiting to see, get that clarity on what Trump has proposed, and then, get the clarity on what Trump's policy agendas are actually going to be, how aggressive he's going to pursue the various things that he's announced, and also who he populates his government with, because that's also going to give us some clues on the next steps as well. And so, we've seen a lot of market exuberance, particularly in the US, as a result of the Trump elect, but we still need to wait and see to get some more substance on how those things are actually going to be implemented and the timing of those things, because that's of course not only going to impact the US economy directly, but it's also going to have impacts on the global economy and of course here in Asia, which is so reliant on trade flows as well.
Certainly. We'll see whether or not that exuberance continues as the week goes on. Katrina L., we'll leave it there. Director of Economic Research at Moody's Analytics. Thanks so much for your insights this morning. Now, up next, world leaders prepare for the COP29 climate summit in Azerbaijan, where countries are due to agree on a new global goal for climate finance. We'll discuss the details next and how Donald Trump's re-election could impact international cooperation. Stick with us. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Paul Allen in Sydney. World leaders will gather in Baku, Azerbaijan, for this year's COP29 climate conference, where the crucial question for the summit will be climate finance. Looming over negotiations at the event, the re-election of Donald Trump. He's vowed to take the US out of the landmark Paris 2015 agreement once again. Let's bring in Bloomberg Horizons Middle East and Africa anchor Jemana Bisetchi, who's in Baku. So, Jemana, what's on the agenda for this COP?
Yeah, well, the thing about this COP is it's a smaller COP than the COP that took place in Dubai last year and is smaller than the one that's going to take place in Brazil. It's been called the Finance COP, namely because it is the COP that is meant to build on the commitments that were set forth in Dubai last year, but with a focus on financing. And of particular focus is this new figure that they're going to be released, so-called the new collective quantified goal. Now, this was a number that was put in place back in 2015 and puts together a total amount of contributions that rich countries will give towards developing countries to help them with the transition and with climate adaptation and mitigation. That 100 billion number, I should just tell you, has only ever been reached once, and that was in 2022. The number is set to expire this year, which calls for a renewal of a total figure when you look out over the next decade. So that is going to be one of the focuses for this COP, but it's coming at a time when, of course, many countries' budgets are restrained at the moment. They've got a cost of living crisis, inflationary pressures, budgetary pressures, in addition to many questions about where exactly the funding is going to come from, which calls for more help from multilateral institutions and the private sector as well. So financing COP, but of course you have to bear in mind that geopolitics are going to be looming large. We're still in the midst of a war that's taking place in Europe, a war, conflict in the Middle East. You've got tensions between China and US. And then just last week, we had the re-election of President Donald Trump back to the White House, which again could torpedo some of the discussions taking place here as well.
Yeah, and Jumana, I mean, in the past, when I've covered COP, you really do hear a number of developing countries pleading, well, not pleading, but really, you know, it's difficult to even get the attention of developed countries sometimes when it comes to these financial commitments. When we think about this re-election of Trump, I mean, how does that potentially influence the conversations that we'll see during COP?
Yeah, the irony is some of the biggest world leaders are not actually here. And we're talking about not just President Biden, but also world leaders from China, from Germany, from France. But President Trump is not here, but his presence will be looming large, namely because if you rewind back to 2016, one of the first decisions he took was to withdraw the U.S. from those Paris Accords, which sort of enshrined that 1.5 degrees global warming into the framework that all of the world have signed up to. So withdrawing from that 2015 Paris framework could be quite disruptive. He could even go one step further and withdraw from the UN framework in its entirety, which would make it very difficult for the US to get back in again. And remember, he has pledged to remove tax cuts, subsidies on everything from renewable energy, clean energy to EVs. He's also talked about boosting up and ramping up fossil fuel production, which is antithetical, basically paradoxical with, you know, the whole purpose of the discussions here. But in the last few years, the U.S. has gained a lot of credibility in terms of leadership with the passage of the Inflation Reduction Act. If they were to withdraw, it would be very disruptive because you would be losing this central leadership figure. And that is a big question. And so this COP was meant to be one about financing, which in itself is a very difficult discussion. But with the potential absence of the U.S. as a leading figure, it then raises some existential questions about whether or not the world can actually come together to agree to these climate commitments and on a credible pathway to get to net zero by 2050. Big questions here. And again, the U.S. and questions about the U.S. leadership have thrown a lot of these questions into doubt.
Certainly. Really great to get your reporting. Bloomberg Horizon's Middle East and Africa anchor Jumana Bursachi in Baku, Azerbaijan. Thanks so much, Jumana. We'll check back in with you in just a bit. Now, coming up, after weeks of deadly protests sparked by Mozambique's election results, calm returns to the capital. We have an update next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. In Mozambique, calm has returned to the capital, Maputo, after police used deadly violence to break up post-election protests. The city's port resumed operations and some public transport was operating on Friday, a day after clashes left at least 5 people dead. For more on this, let's bring in Bloomberg's Andiro Oganga, who is joining us from Kigali. So, Andiro, talk to us about how this tension has been playing out in the streets. It's It's now been a few weeks since this election. And most notably, I mean, how is it playing out in the markets?
Jen, as you mentioned, it's escalating and it culminates from the elections that they had, highly contested. The results were very controversial. And the opposition leader, Venancio Mondlane, announced 4 waves of protests. So on Thursday, we saw the third leg that had come from about 7 days of demonstration leading to the Maputo unrest that quickly escalated, turned violent. And as you mentioned in the intro, 5 people lost their lives, about 120 were injured. And the government was forced to deploy the army to try and restore some form of calm and balance back in the streets. And this tension led to the closure of the border, particularly the border with South Africa. And this stopped the movement of exports, particularly ferrochrome that comes from South Africa, the biggest producer. And half of these exports go through the Maputo border. You also have the ports that were closed due to security reasons, but a day after they were reopened and trucks were able to move over the weekend. If we zoom in on the markets that you mentioned, we saw their dollar bonds plunging, but then they steadied. The big concern remains their natural gas exploration project together with Total Energy, $20 billion project that could face further delays.
So we're dealing with a contested election result. It seems unlikely that the volatility and uncertainty is going away. What's going to happen next?
Absolutely. It's not going anywhere. The opposition leader has announced that the 4th wave is coming, and he says it's going to be extremely painful because the government used excessive force. Mondlane also says that it's going to affect the economy of Mozambique in a severe way, and the economy is already affected. If you look at the closure of the land border, the government is saying that it has cost them so far $6 million for a government that is struggling to even finance itself. This is a country that has spent a lot of money fighting insurgencies and also is struggling with servicing its debt. S&P has raised concern over their ability to continue servicing their local debt and even cut outlook. So moving forward, there needs to be a truce. Both parties need to come to the negotiation table and have a dialogue. The question is, are they willing to do that?
All right, Bloomberg's Ondero Oganga, thank you. Still to come, we look at what another Trump presidency means for the Middle East. That discussion up next. This is Bloomberg. This is Horizon's Middle East and Africa. Our top stories this morning. Bitcoin tops $81,000 for the first time on optimism about Donald Trump's embrace of digital assets and the prospect of a crypto-friendly US Congress. And this year's climate conference will see a new global goal for climate finance. We're live at COP29 in Baku as Donald Trump's victory promises to shake up US energy and environmental policy. And the Mideast is bracing for a Trump presidency. We'll tell you what the oil-rich nations are watching out for.
That's right. It has just gone 8:30 a.m. across the Emirates, 6:30 a.m. here in Johannesburg. I'm Jennifer Zabasaja.
And it's 3:30 Monday afternoon here in Sydney. I'm Paul Allen in for Jemana Bisetche. Jen.
That's right. Paul, it's great to have you. Listen, let's see how this week shapes up. But if we take a look at where the markets are right now, potentially we're getting some indication. You were mentioning a few of the assets we're paying close attention to. U.S. equity futures, S&P futures, pointing towards a higher open right now, as you can see right there. And really that is coming after we saw a big week for U.S. equities, of course, after the re-election of Donald Trump. And we saw the 3 major indices closing at all-time highs. The S&P situated above that 6,000 mark. We'll see whether or not that continues. Bitcoin, you also mentioned that, Paul, clearly still seeing some upward momentum, though, setting fresh records on that potential positive sentiment coming from Trump's reelection. Potentially we'll see a more crypto-friendly Congress, and the biggest cryptocurrency also helping to lift up some of the other tokens there. It is a holiday in the U.S., but we do have U.S. bond futures up right there just to see potentially what the week could bring. We will potentially get some Fed speak after that Fed decision last week. We'll also get U.S. CPI. Potentially we'll get some indications for the growth trajectory of the economy. And finally, we have Brent crude up, Brent crude up on the chart, but it is down today, down nearly 0.4%. And that is coming from that softer outlook from the top importer, China. We were mentioning that at the top of the show. Right now, Brent crude at 73.56. And I want to just stick on oil. We were talking to Jumana just a little bit earlier about COP29. And if we take a look at what this COP could potentially bring, a lot of focus is going to be on countries and their pledges around climate. And if we take a look at this chart here, the U.S. continues to pump more oil. And again, with the re-election of Donald Trump, there are potential concerns that we will continue to see this upward trajectory. So what that means for fossil fuel reduction and also the price of crude is something squarely in focus. Now, let's take you over to markets in Asia and see how they are faring. Avril Hong is standing by in our Singapore studio. Hey, Avril.
Hey, Jen. Yeah, markets are faring really negatively in Asia today. The drag coming from the Hang Seng. It's the benchmark heavyweights like Tencent, Alibaba that are really underperforming after the NPC failed to impress. They didn't come through with measures that could kind of stimulate demand. We're also keeping an eye on some of these tech names because their earnings are due later in the week. So really negative on the Hang Seng. The Nikkei not faring as badly today. Pretty flat compared to the rest of the region. Flip the board. Take a closer look at what we're seeing on the yen because it is taking a leg lower today, and this is after the release of the summary of opinions from the BOJ's October meeting, which is, of course, where it didn't move on rates, but we did get a hawkish tone from the BOJ Governor Ueda. Today, based on the summary of opinions, it looks like the policymakers also discussed the need to be cautious on rate hikes, and this is why you're seeing that reflected in dollar yen as well, guys.
All right. Thank you. Avril Hong there in Singapore. Well, Donald Trump's return to the White House will have deep ramifications for the oil-rich Middle East. During his first term, Trump largely cultivated strong ties with regional governments. But since then, many countries in the Middle East have gravitated towards China. For more on this, Bloomberg's Matthew Martin joins us from Riyadh, and Bloomberg's Zainab Fatah joins us from Dubai. So, Matthew, let me start with you. What is Trump's presidency likely going to mean for oil prices, and how will that impact the region?
Good morning. Well, yeah, look, I think, in the intro to this, you were showing that footage of Donald Trump's trip to Saudi Arabia at the beginning of his first term. And, that was really one of the big signs that sort of cemented this very strong and positive relationship that a lot of Gulf leaders had with him. They're very favorable towards Trump, and, people quietly in the region, I think, were welcoming of a return of Donald Trump's presidency. There's a lot of issues that they align with him on. But one of the big things that they will have to be careful about is how Trump pursues this energy dominance plan for the U.S. He's going to really sort of take any shackles off the U.S. position towards drilling for more oil. We've already had Ursula von der Leyen talking about buying LNG from the U.S. So clearly, there's a big push out from the Trump administration for more oil. And that's going to weigh on prices at a time when the GCC countries have really been trying to get more barrels out into the market. They've been losing market share. They're not getting the prices that they want. And so the threat of more oil out of the U.S. is going to only make that much more complicated.
And Zainab, jump in here. I mean, folded into this story that Matthew was just talking about with oil, there's also this story of China and potentially a lot of the relationships that Gulf countries have with China potentially affecting the relationship with the U.S. Can you walk us through what there is that we should be paying attention to on that front?
Yeah, this is expected to be another hot hot button issue for the Gulf countries when it comes to the U.S. administration. Over successive U.S. presidencies, we've seen the U.S. telling pretty much the Gulf and the world that they want to pivot more to China and Asia, deal with what they see as a Chinese threat. And in many ways, kind of the countries here started developing these relationships with China and Russia as a way to diversify away from their dependence on the U.S. for many years. We've seen the U.S. Countries like the United Arab Emirates and Saudi Arabia now get into the AI technology and other technologies that kind of China had a little bit to offer at with less restrictions. So we've seen issues develop around the 5G network in the UAE between the U.S. and the UAE over the past 4 years. We've seen the UAE being forced to kind of divest from some of its Chinese technology. But there is a lot more there that could become a potential point of tension between those countries. And it will be interesting to see how they navigate those issues.
Yes, so Zainab, how do you expect they'll navigate some of these issues? You've described some of the changes that have been made so far, but could we likely see a more fundamental policy shift?
A lot of analysts were telling me they expect that somehow these countries have a lot of bargain chips right now. They're more unified, their economies are stronger, and they're becoming the favorite banker to the world with their sovereign wealth funds and their ability to deploy cash everywhere. So they think that the U.S. administration might cut them some slack here and there as they deploy their large pools of capital towards certain policies that are close and dear to the U.S. president, or certain areas where the U.S. might see as a priority. It's kind of a situation that's developing, and it's very hard to see how the U.S. administration will come in on this. Is it gonna be very, very tough, or is it going to be able to negotiate on certain issues, and is it willing to kind of find certain solutions to certain problems?
Matthew, we've been focused for quite some time on Saudi's sovereign wealth funds. I mean, could we potentially see, again, like a change in policy direction when it comes to these sovereign wealth funds, trying to balance the interests of the U.S. and also China?
Yeah, I think, as to what, following on from what Zainab was saying, there has been this shift within the way the sovereign wealth funds are investing as well. They've been looking more towards Asia. They've been looking at trying to diversify to some degree. So, we've seen a lot of deals starting to happen in Asia. We've seen the Saudis in particular, who've been pretty aggressive in doing tie-ups with Chinese firms, in really pushing these Chinese investment ties and trade ties. With this new administration, clearly Donald Trump is going to be wanting to say that the U.S. is the key partner for the region, both in terms of security and in economics. Now, the sovereign funds can already point to the fact that the U.S. is their #1 country that they have invested in out of anywhere in the world. So they will be trying to lean on that to say, look, we have done all of this investing in the past, but I think, the new administration is clearly going to put more pressure on the Gulf funds to continue investing in the U.S. and continuing to see the U.S. as their big partner. That's going to create some tension, I think, as these sovereign funds look at sort of balancing some of the deals and investments that they've done over the past 4 or 5 years with the pressure that they're going to be under to pour money into the U.S. and to keep that as their #1 relationship. And I think that we will see them respond pretty quickly, I think, to the fact that Trump is transactional in nature, and so they're going to know that money, dollars going into U.S. companies will equal a good relationship with the administration and the White House.
It's fascinating. A lot to pay attention to. Appreciate you both for your reporting. Bloomberg's Matthew Martin in Riyadh and Zainab Fattah in Dubai. Thank you so much. Now, coming up, Adnoc Gas reports net income for the third quarter that beat estimates. More on this next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Now, Adnoc Gas says its net income for the third quarter came in at $1.2 billion, beating estimates. For more, let's bring in Peter van Driel, Adnoc Gas CFO, joining us in Dubai this morning. So, Peter, great to have you. It's just been a few days since we did see you sign that new SPA, the sales and purchase agreement for LNG this week. I mean, are you anticipating to have more deals in the pipeline? What are you looking at in the near term?
Yeah, morning, Jennifer. Yes, there will be more deals signed. Our LNG business is important. It's growing. You probably heard that we are going to acquire Ruwais LNG as well. That's an additional 9.6 MTPA that we will add to our portfolio. Today we've got 5.8 MTPA. So the LNG business is growing on the back of demand that we see 3% growing year on year, and it's in particular into the East and Asia.
Peter, in terms of the Ruwais LNG that you mentioned, how much of that output is going to be set aside for spot supply?
So about 75% today has been contracted, and that is long term. So just to remind all the viewers, that means that the cargoes that will sail from late 28 already have been sold. It tells you something about the strength of the market. And we'll probably keep it 20%, 15% up for spot sales so we can opportunistically play the market.
Peter, let's stick on that. I mean, you talk about the strength of the market. There are a number of uncertainties that we've been speaking with our guests about all throughout the show. I mean, is there the potential that it could be derailed, your attempts at sort of taking this opportunistic approach with the markets?
I think over the years, we've demonstrated to be an extremely reliable supplier. Security of supply is, of course, just as important for many of the buyers as is the price. And we take care that our customers do get what they expect. There always will be uncertainties, but we're prepared for anything in that sense. And like I said, our track record is pretty strong.
Do you see the global LNG market struggling with oversupply? Can you anticipate a glut coming?
We don't see it, to be honest. We have our current operations selling LNG. We can go either to Europe or we can go to the East. We have been to date not seeing any signs from weakness, so that is today. And as I said before, if we look at the Ruwais LNG, first cargo sailing on the 2nd of December 28, that has already been sold out. So in that sense, our LNG business, of course, comes with a steady growth in demand. But when new facilities come on stream, you get a bit of a chunk of new volumes. And the industry is used to that. So we're not concerned about the glut that some people talk about. We don't see it.
What does concern you then, Peter?
I think in general, the company is quite resilient. We protect our investors by having downward protection when oil prices come down, where it means our gas price export may go down, but that means that we pay less for our raw gas. So we've got a bit of a hedge embedded in our operations. I think if we look at the risks, it is for us very much how do we deliver our big investments on time and within budget. That is our biggest challenge, and we're working hard to realize that, because you probably have seen that the company is going to grow dramatically in the next 5 years. We will go from 10 million scuffs a day to 13 million scuffs in 29. We're going to increase our EBITDA by 40% in the coming years. So growth is the central theme, and that is what we're focused on, and that is what we're managing.
In terms of marketing your product, is Adnoc Gas going to handle the marketing for the output of Adnoc International's LNG projects, or do you have something else in mind?
So today, everything that comes out of existing production facilities and the new facilities that will come to us at cost at the second half of 28 from Ruwais is all handled by our marketing team. So we've got one face to the market when it comes down to these long-term sales, but also, as you said before, all the spot sales are handled by this team as well. And like I said, the 20%, the 15%, that gives us that optionality to send our cargoes either to the west or to the east.
All right, Peter van Driel, Adnoc Gas CFO in Abu Dhabi, thank you so much for joining us. Let's take a look now at some of the other stories we're following. Jen.
Yeah, thanks so much, Paul. In Egypt, inflation has slightly risen for a third month. Annual consumer prices in urban areas rose 26.5% in October, driven by a sharp rise in fuel prices. The country's central bank may keep interest rates on hold due to the rising inflation. The government, meanwhile, plans to continue reducing subsidies, including fuel prices, to trim the budget deficit and meet IMF loan conditions.
Turkey's central bank has raised its inflation forecasts for this year and through 2026, citing price gains that exceeded estimates for 2 consecutive months. The latest outlook shows officials seeing inflation finishing the year at 44% and then reaching 21% by the end of 2025. The forecasts amount to short-term goals for the monetary authority as it tries to achieve the official target of 5% in the longer term. Coming up, Indian-born tycoons enter the spotlight after the UAE's blockbuster Lulu IPO. We're live in Dubai next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen in Sydney. Let's get back into Middle East markets now. Abu Dhabi supermarket retailer Lulu is set to become the UAE's largest IPO this year after raising $1.72 billion. This is set to make the company's owner, Yusuf Ali, the region's second richest private individual. For more on this, Bloomberg's Nicholas Parasi joins us from Dubai. So, Nicholas, Lulu's founder is a billionaire from India. What more do we know about him?
Well, like so many other billionaires that made their fortune here in the UAE, he came from India in the 70s. He arrived in Abu Dhabi and soon after opened his first retail store. And then in the ensuing years, on the back of the oil boom here in the region, Lulu grew into one of the biggest retail operators of the regions, which now culminated with this massive IPO. Lulu is obviously the latest in a series of IPOs we've seen here in the region. It cemented his status as a billionaire. Yusuf Ali is obviously not the first Indian billionaire to make a fortune here. There are others in the education sector like Varki, or even his son-in-law is also very successful in the healthcare sector.
And Nicholas, I mean, you talk about the different sectors then that have been successful for a number of other Indian billionaires in the region. Is it that oil boom that you were just mentioning that has been the main driver behind their success, or is there something else at play here?
It is, but there's more than just that, right? So obviously their rise and their size reflects the growth we've seen in the country. Today, UAE is home to 10 million people, about a third come from India. But what I think they did very smartly, these entrepreneurs, these first generation entrepreneurs, is to spot opportunities in sectors that met the basic demands of this growing population. Therefore, they grew in sectors exactly like education, healthcare, and retail. And I think on top of that, they're also very, very smart at navigating the competitive landscape here. They're competing against state entities, they're competing against government entities, and they've done really well in finding their own niche.
So the Lulu IPO is obviously big in terms of monetary value, but why else is it a big deal for the region?
Well, it's very important because, as we know and as we reported before, this region is experiencing an IPO boom. It's one of the only markets globally where we've just seen a rush to the capital markets in the last 1 to 2 years. But most of these were primarily led by state entities. They were also primarily in the energy sector for obvious reasons. But now you have retailers like Lulu. It's not even the first retailer to go public here. You had another one called Spinneys. And then next month, we might even see Talabat, the food delivery platform. So that is definitely an important shift to keep an eye on as capital markets in this region grow deeper.
All right, Bloomberg's Nicholas Parazzi, thank you very much. Jen.
Yeah, thanks, Paul. Now, for a look at some other stories we are following. Qatar says it's stepping back from efforts to mediate between Israel and Hamas in pursuit of a ceasefire in Gaza. The Gulf States Ministry of Foreign Affairs says it will resume talks when the two sides show, quote, willingness and seriousness to end the conflict. A source tells Bloomberg Qatar decided it can no longer constructively contribute to the process without a genuine interest in a resolution. Now, before we let you go, let's take a look at where our futures are pointed right now. In the green there, Paul, what are you looking at from your vantage point?
Yeah, no trading in the US this coming day, of course, Veterans Day, but futures are still trading and in positive territory, as you see there. Here in Asia, though, most of the screen is red, and we're watching yields as well. They've been rising, and a number of the big houses say that bond market sell-off probably not done yet. We have Trump fiscal plans to cut taxes, impose tariffs. Well, that could lead to inflation. So we've got swaps traders pricing in fewer rate cuts for the coming year. We'll have CPI data out of the US later this week as well. But that is it for the first hour of Horizons Middle East and Africa. I'm Paul Allen in Sydney. Stay with us for the second hour of this show. Jennifer Zabasaja back in a minute.
This is Horizons Middle East and Africa, our top stories this morning. Bitcoin tops $81,000 for the first time on optimism about Donald Trump's embrace of digital assets and the prospect of a crypto-friendly U.S. Congress. Qatar says it's stepping back from efforts to mediate between Israel and Hamas in pursuit of a ceasefire in Gaza. And this year's climate conference will see a new global goal for climate finance. We are live at COP29 in Baku as Donald Trump's victory promises to shake up U.S. energy and environmental policy. Good morning. I'm Jennifer Zabasaja in Johannesburg, where it has just gone 7 a.m. Welcome to the second hour of Horizons Middle East and Africa. Welcome to Monday. It was a busy week for markets last week, so let's see where they are positioned right now before the day gets going. If we take a look at U.S. equities, last week was a big week, as I mentioned. We saw all three major indices hitting all-time highs, but right now, potentially we see that continuing this week. S&P futures up just about 0.2%, and paying close attention to that 6,000 mark to see whether or not that upward trajectory continues. Bitcoin, we mentioned this at the top of the show. It's another asset in focus. It is hitting fresh records on that potential positive momentum from Trump's reelection. Again, potentially a crypto-friendly U.S. Congress, and Bitcoin also helping to lift up some other digital assets that we're seeing there. It is a holiday in the U.S. It's Veterans Day, so we will not see U.S. Treasuries trading, but still paying close attention to 10-year bond futures. We will get a number of Fed speakers this week, including Jerome Powell. We also get U.S. CPI data. Potentially, we will continue to see that bond market volatility continuing to ebb throughout the week. And finally, we have Brent crude on the board, down almost 0.4%, and it is the second day down for Brent crude, and that is on that softer outlook for the top importer, China. Right now, Brent crude at about 73.58. And if we just zero in on crude, I want to show you this terminal chart because this is in focus as COP29 gets started today. We mentioned, of course, potentially Donald Trump's presidency brings new policies, and in particular, it could mean more drilling from the U.S. And as this chart is showing, we've seen U.S. production continue to grow. So what could that mean with a new Trump presidency? What could that mean for prices? And really, then, what does it mean for climate pledges as we persist throughout the COP29 climate conference? We'll be paying close attention to that and check in with Jumana in just a bit. But for now, let's check in on how markets in Asia are faring. Avril Hong is standing by in our Singapore studio. Hey, Avril.
Hey, Jet. Yeah, we're seeing these Chinese tech names. I thought I'd just kind of zero in on them because these are the big drags on the region's benchmark today after a Chinese NPC that wrapped up with little in the way of efforts or measures to stimulate demand. But we're also keeping an eye on Alibaba and Tencent this week because their earnings are due. And remember, for Alibaba, it has been missing the mark the past couple of scorecards. Still, when you look at the Hang Seng Tech, it looks like it's managing to pair some of the declines from the morning session as the afternoon session kicks off. Let's flip the board and take a look at this chart, courtesy of MLive's Mary Nicola, which will show you the yield differentials between the US and China and how this line in blue, it has actually been climbing. And given the political as well as economic backdrop in the US, yields there are likely to remain elevated. So the signal we're getting is that upward pressure on dollar China looks increasingly likely. Jen?
Thanks so much, April Hong. We'll check back in with you in a bit in Singapore for us. Let's pivot to the Middle East. Qatar says it's stepping back from efforts to mediate between Israel and Hamas in pursuit of a ceasefire in Gaza. The Gulf state has been the primary interlocutor between the militant group and the Jewish state. Let's bring in Bloomberg's Stuart Livingston Wallace in Dubai for us. So, Stuart, I mean, does this effectively mean the end of diplomatic efforts to achieve a ceasefire? I mean, where does this position discussions at this point?
I mean, I think in some respects it's a reflection of what everyone was kind of already thinking, which is these ceasefire talks don't seem to be going anywhere very fast. And that's at least in part because the situation on the ground remains fluid. Remember that Israel has had to go back into bits of northern Gaza that it has repeatedly said that it's cleared, and then you get these sort of pockets of resistance that come up again and the fighting resumes. So in terms of Qatar's position, I think, again, this is a reflection of its increasing frustration that in some respects it had become the punching bag in this sort of 3-4 way discussion where it somehow always seemed to get the blame despite its best efforts to try and bring the sides together. And I think in terms of our reporting from within Qatar yesterday, there was a mounting sense of frustration that a lot of those parties that were effectively using the talks as nothing more than politics, you know, there didn't seem to be any real intention there to come up with a solution.
What could that mean then, Stuart, for Palestine? I mean, what could we potentially see transpiring there? We were just seeing Antony Blinken there, who has made a number of trips to the region. I mean, what could this potentially look like?
I mean, I think particularly in terms of the US side, I think there is a real sense there that they would like to get some sort of accord over the next couple of months, certainly before the new administration comes in. So I think there are real efforts to try and find some solution. But again, in terms of what the future looks like over the next several years, that's really unclear. At the moment, you haven't got a credible Palestinian Authority that could potentially take over Gaza. Yes, you have the Palestinian Authority in the West Bank, although it is somewhat weakened, to say the least. And you then again, you need some sort of international force within Gaza to sort of keep the peace, as it were, and to make sure that you don't get a resumption of the fighting. And then on top of that, you need billions of dollars to rebuild all the destruction that's taken place over the last 13 months or so. So there's some really big hurdles here to get something resembling a functioning state again in Gaza.
All right, we are going to leave it there. Bloomberg's Stuart Livingston Wallace, thanks so much in Dubai for us there. Now, we have some breaking news right now that we are just getting, and that is on Vodacom earnings that we just got. Vodacom's headline earnings per share at $3.53 per rand. And if we talk about the interim dividend share at $2.85 rand, Vodacom is, of course, a significant wireless provider here, telecom provider here across Africa. That is just a look at what we've seen over the past year with the company, and potentially we'll wait to see what else they say in terms of currency volatility and how that has potentially affected their own earnings. But that is just a look at what we just got from Vodacom, their first year operating profit at 16.13 billion rand. So that is just some news there on Vodacom. Now, coming up, Asian stocks slide after China's planned debt swap program, and Bitcoin hits a record $81,000. We'll look at the market outlook with Sebastian from Terebinth Capital. She's here with us in studio. That is next. This is Bloomberg. Well, welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Now, China has announced a $1.4 trillion lifeline to help local governments deal with hidden debt, but stopped short of unleashing new stimulus. Our China correspondent, Min Min Lo, joins us from Hong Kong. So, Min Min, give us the details of the stimulus package. A little bit disappointing for investors.
Yeah, investors had been hoping for additional stimulus to target the property sector, to target domestic consumption, or even recapitalizing the banks. But what we got was mainly in the debt resolution package, 10 trillion yuan, which is at the higher end of estimates, 6 trillion yuan coming from local government special refinancing bonds over the next 3 years, and then another 4 trillion yuan coming from the regular quota of local government special bonds over the next 5 years. So yes, this debt resolution package slightly higher than expected, but overall still disappointing because of the lack of other additional measures. Now, according to the Minister of Finance, Lan Fo-an, he's saying that the measures will reduce China's local government hidden debt by about 12 trillion yuan by 2028, and it will save local governments about 600 billion yuan in interest payments, and these would be cash that these local governments can then invest in the economy or pay back those civil servant salaries that have been owed for many months.
But Min Min, I mean, what does this potentially mean for the deflationary concerns that we have been seeing out of China? Does this crack the concerns at all?
Yeah, well, there had been expectation that maybe the government would approve some form of central government special sovereign bonds, which is seen as quite key to break that deflationary spiral. But we haven't got that yet. But it's still possible that these are still on the cards. It's simply delayed for now. Perhaps the government waiting for more certainty over what Trump's policies would be like, and they're reserving a bit of that fiscal firepower to be rolled out maybe next year. We did get forward guidance from the Ministry of Finance and from the government that they plan to have a more forceful fiscal policy next year. They plan to raise the fiscal deficit, increase funds transfers from the central government to the local governments, expanding the equipment upgrading program, for example. So quite a number of measures that they have given forward guidance on, and perhaps the next window to look out for is that December Central Economic Work Conference, when policymakers will also gather to discuss the budget for next year. But of course, the final number will only be announced in March of next year.
China correspondent Min Min Lo. Min Min, thanks so much for that updated reporting there. And as we've been talking about for the past few minutes, Asian shares slipped after China's planned debt swap program looked insufficient to some investors. Elsewhere, though, Bitcoin surged past $81,000 for the first time, driven by the incoming U.S. president's support for digital assets. Joining us now is Sebastian, head of Equities at Terebinth Capital. Anne is here in studio for us. So, Anne, thank you for being here. We were just speaking with our reporter there about what we're seeing in China and potential negative sentiment coming in from investors. When we think about the U.S. election and what we've seen in market price action, I mean, what do you think that broadly says about investor sentiment on EM?
So a Trump re-election is negative, generally perceived negative for emerging markets, China, including South Africa. The reality is there's a lot of talk versus what actually gets implemented in reality. However, worst case scenario, should he implement the 10 to 20% import tariffs blanket on all worldwide imports and a 60% import on China, that would be negative for emerging markets, induce further tensions in trade, global supply chains. But all in all, if you look at it, there's been a lot of talk about these blockbuster tariffs. But what gets implemented is it's probably they're looking for concessions rather than implementing these tariffs. And looking at 2018, 2019, in that period, there was more modest tariffs implemented, which had a less impact on earnings growth. So it's possible that concessions is what they're looking for rather than imposing these negative tariffs on a worldwide as well as China perspective. The dollar strengthens in this environment. Really, this potential fiscal support, corporate tax cuts, inducing capital inflows to US. So all of that is positive for the dollar, which makes it a negative environment for emerging market assets, especially if the fiscal support should come through. That reduces the potential of further rate cuts. So overall, a Trump re-election is generally negative for emerging markets, especially China, and commodity exporters like South Africa would be negatively impacted.
What do you make then of what we have seen, though, over the past few days? We were mentioning Bitcoin's been up, U.S. equities were hitting all-time highs. I mean, what does that signal to you? More upside for U.S. equities and downside to come for EM?
So in the near term, it seems like U.S. equities were the clear winners in this trade, and it really is as a function of all those corporate tax cuts and the other potential beneficiaries for the U.S. companies. But I think in the longer term, this is a short-term trade. In the longer term, I think the EM versus DM growth differentials, the rate cuts, and also the valuation of the U.S. market, unless you see a rotation trade out of those AI tech stocks, EM has still got a good story going ahead. But in the near term, I think it's all about Trump's re-election.
Is there anything that we could hear potentially from Fed Chair Jerome Powell to bring some upside to EM? Because we did, once the rate cutting cycle did commence earlier this year, we did see a bit of upside. I mean, is there anything we could hear from him?
So, I mean, in the last meeting, he did cut by 25 basis points as expected. I think, what he has flagged from an election perspective is that that's not going to change the policy. However, it's a wait and see to see, how does this new administration implement changes. All in all, we should see a shallow rate cut cycle go through. The economic activity from a U.S. perspective, the third quarter GDP has been strong. The labor market, a bit more of a mixed bag, and unemployment figures from the last quarter, from October, was on the softer side. But all in all, I think if economic activity still stays firm and the unemployment levels level out, it's possible from the monetary perspective, a shallow rate cut cycle is still inducive for EM assets. The longer term, the dollar does look quite strong, so it should weaken. But it's a bit of a tricky situation right now because the economic activity is still looking quite firm.
Let's talk about the economic activity here in South Africa. We're going to get third quarter unemployment tomorrow, I believe on Tuesday. I mean, when we take a look at where the South African economy has been, we've seen upside, of course, we've talked about that since the election. Does this U.S. re-election of Trump, stronger dollar, I mean, does all of this sort of dent any sort of growth trajectory that we do see?
I think the reality with the unemployment figures is it has been highly volatile recently. I mean, the last quarter you did see a spike, but I think you need to look through the recent volatility and rather focus on the political developments, the government of national unity. So with that, you should see an upward trend in growth, and that resulting in further improvement in employment. And in the near term, maybe unemployment will move sideways. The U.S. election outcome does matter, as well as in terms of the China stimulus, that matters a lot for the South African equity market and South African market and all in all. But I think, the driver going forward is this government of national unity and it being able to improve the employment outlook in South Africa.
What about the rest of the continent? I mean, can you focus in on some other areas that you think are worth pointing out?
So, in the rest of Africa, it's important to be selective because there is a lot of currency overhangs in some of the Nigeria and other parts of the continent. It's really important because of this oil and geopolitics to be very selective in the rest of the continent. But you are seeing some good growth come out of some of the areas. But all in all, I think it's a challenging environment considering the geopolitics in the continent.
Wow, it's difficult to be an investor, but fascinating to get your insights. And Sebastian, head of equities at Terebinth Capital, joining us here in studio in Johannesburg. Now, up next, world leaders prepare for the COP29 climate summit in Azerbaijan, where countries are due to agree on a new global goal for climate finance. We'll discuss the details next and how Donald Trump's re-election could impact international cooperation. Stick with us. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Now, world leaders will gather in Baku, Azerbaijan for this year's COP29 climate conference, where the crucial question for the summit will be climate finance. Looming over negotiations at the event, though, the re-election of Donald Trump. He has vowed to take the U.S. out of the landmark Paris 2015 agreement once again. Let's bring in Bloomberg Horizons Middle East and Africa anchor Jumana Bersetchi, who is in Baku at the conference. So, Jumana, give us some insight. I mean, what is on the agenda for this COP?
Yeah, let's just start with the scene setter for COP29 itself. Many world leaders have chosen not to attend, by the way, including the likes of President Biden, President Xi from China, amongst some of the other European leaders not attending, Macron, Scholz, for example. This COP was never meant to be as big as COP28 in Dubai or the upcoming COP in Brazil next year, but it is a COP that is being dubbed as the finance COP. There's going to be a particular focus on climate financing. And one thing that comes to mind is this target known as the new collective quantified goal that was set back in 2015. The goal there was for rich countries to provide developing countries with $100 billion worth of aid annually to help them with the climate transition and climate adaptation. Now, this goal is up for review, and one of the hopes is that out of COP29, we will get a new revised number. But the issue is that the need and the ask out of the developing countries is so much higher than it was. In fact, the IEA estimate that by 2030, $1 trillion a year worth of aid is necessary in order to help those countries with the transition. How we move from $100 billion to $1 trillion is going to be a big question. Where the financing comes from at a time where the global aid bucket has started to shrink, there are lots of pressures on a budget at a national level, in addition to questions about who exactly is going to be receiving those financing terms and on what conditions. Are they loans, are they grants, etc.? Now, that is the financing angle, but then, of course, you have to bear in mind that this is coming at a very politically sensitive time for the world. Geopolitically, you still have a war going on in Europe. The Ukraine-Russia war is still raging. You still have the conflict in the Middle East. You have tensions between U.S. and China. And then the biggest new piece of news is that President Trump has now been re-elected back into the White House. And you may recall, Jennifer, that one of the first moves that President Trump took when he was president back in 2017 was withdrawing the United States from that all-important Paris 2015 framework, which enshrines that 1.5 global warming goal. So big questions about what President Trump or the return of President Trump could mean for some of these climate ambitions.
Yeah, and Jumana, just stick on that for us, because I imagine, I mean, you're there. It sounds like it's already getting kicked off, that summit. I mean, is Trump's re-election already infiltrating conversations from what you've heard?
100%. And even though he is not here, his figure is looming very large. And this is because if you think about it, the Biden administration actually did gain a lot of credibility the last couple of years with the passage of the Inflation Reduction Act. They have led the way on so many of these international discussions, the negotiations that take place behind the scenes, and the fact that even at COP28, they were able to come to an agreement on even the phrasing around fossil fuels and the phase out of fossil fuels. A lot of that was because of the pushing behind the scenes from the U.S. With the return of President Trump, he has pledged once again to withdraw the U.S. from that Paris framework, even possibly withdrawing fully from the UN framework, which would make it very difficult for the U.S. to get back involved again. He has talked about removing subsidies, tax cuts for clean energy, and even pushing production once more in fossil fuels. And so this throws a question of leadership and global leadership into doubt. Who will take the reign if the U.S. step away? And also a crucial source of financing, because to rewind back to what I was saying, this is going to be a COP namely centered around financing and where you get the resources from. The U.S. is the world's largest economy. They're the largest contributor to the World Bank, which are expected to play a very big role in terms of financing this next stage of the climate transition. And so it's upended a lot of the discussions here, and actually it's turned the discussion around financing into one that's become a little bit more existential, because according to many agencies, this year is on track to be the warmest year on record. And unless something is done, unless further commitments are agreed to, and there's a credible pathway towards net zero in 2050, then the world is heading towards an uninhabitable, this is to quote language used by some of these agencies, a future in which case more action is needed, but there will be an absence of leadership, especially if President Trump upends all of that.
Certainly will be fascinating to hear from a number of countries on that front. Jumana, we'll check back in with you. Bloomberg Horizon's Middle East and Africa anchor Jumana Brosechi in Baku, Azerbaijan for us. Now, coming up, Bitcoin's value hits a new high, surging past $81,000 as investors crave crypto after Donald Trump's election victory. More details on that next. This is Bloomberg. This is Horizon's Middle East and Africa. Our top stories this morning. Bitcoin tops $81,000 for the first time on optimism about Donald Trump's embrace of digital assets and the prospect of a crypto-friendly U.S. Congress. Qatar says it's stepping back from efforts to mediate between Israel and Hamas in pursuit of a ceasefire in Gaza. And this year's climate conference will see a new global goal for climate finance. We are live at COP29 in Baku as Donald Trump's victory promises to shake up U.S. energy and environmental policy. It is just gone 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg. Welcome to the second half of the second hour of Horizon's Middle East and Africa, and welcome to Monday. Last week, of course, was a busy week with the U.S. elections. We'll see whether or not some of that momentum continues when it comes to U.S. equities. If we take a look at futures right now, though, S&P futures pointing towards a higher open, up about 0.2%. We're paying close attention to that 6,000 mark, and we saw that continuing to gain some upward traction after the re-election of Donald Trump. And we also saw a number of U.S. equities, the main benchmarks, U.S. indices, the main benchmarks surging after that re-election. Also paying close attention to Bitcoin, as we mentioned, setting fresh records on that potential positive reaction from Trump's re-election. Potentially, we'll see a more crypto-friendly Congress. We're seeing at Bitcoin right now just north of 81,174, also helping to lift up other digital assets. It is a holiday in the U.S., so we will not see treasuries trading, but we are paying close attention to what is happening with the bond market after last week's volatility. This week, we will also get some data prints from the U.S., including CPI. We'll also hear from a number of Fed speakers, including Jerome Powell. Potentially, that has an effect on the bond market. And finally, let's look at Brent crude, down ever so slightly right now, but down for a second day. That is coming after that softer outlook for the top importer, China, continued to disappoint investors right now. Brent crude at 73.78. And just sticking on crude, if we can, I want to show you this terminal chart because it really zeroes in on what we've been talking about today. There is, of course, this discussion around China demand. There's also COP29, and one of the major points will be where are countries at in their own climate pledges, and factor into that a Trump re-election where Trump has promised to increase drilling. If we take a look at this chart right now, we have seen production in the U.S. continuing to increase. So potentially a re-election has more effect on the price of oil and on overall supply demand story that we've been talking very closely with. Let's check in, though, on how markets in Asia are faring. Avril Hong is standing by in our Singapore studio. Hey, Avril.
Hey, Jen. Yeah, Asia markets are down today. The region stock benchmark losing by the most in about a month. The Nikkei is flat, though, amid the yen weakness, and dollar-yen has been climbing amid the economic political backdrop in the U.S., but also what's happening domestically in Japan that's kind of prompted this speculation that the BOJ will be a bit hesitant to hike rates. Today, we got the summary of opinions from its October meeting, and it seems to just cement that idea. So we're seeing 153.6 on dollar-yen. Flip the board, I wanted to rake you through what we're seeing on the latest CFTC data. And it shows you how there's been a buildup in short positioning on the Japanese currency. If we can flip the board and take a look at this chart and how it's actually traders turning more bearish on the Japanese currency. It's not quite what we saw in July, but this bearishness in the yen does make you wonder how is that feeding into import inflation and how, to what extent it perhaps makes the December BOJ meeting a live one. Jen?
Thanks so much, April Hong in Singapore for us. Let's pivot back to Bitcoin. Bitcoin rallied past $81,000 for the first time, boosted by President-elect Donald Trump's pro-crypto stance and promises of supportive regulation. Earlier on Insights, the president of crypto exchange OKX told Haslinda Amin this latest rally, however, is not that much different than past rallies.
It's not going to be different. Volatility is always going to be there, but if you zoom out, in addition to volatility, you also see upward trend very steadily in a 4-year cycle. So everyone who is actually looking at the market and thinking whether they want to jump in, if they are a new investor or existing investor, adding to their position, they need to be thinking about volatility. They need to be careful and leave the room for error. But this is an asset for long-term holding.
For more, let's bring in senior editor for crypto, Ryan Weeks. So, Ryan, talk to us about really how far we're seeing this rally go. We're talking about Bitcoin. We were just hearing there from the founder to be cautious on the volatility. But what are we seeing crypto-wide?
So, Bitcoin obviously hitting new heights today, over $81,000, and it's really become the sort of the definitive Trump trade at this point. It set a fresh record of about 74,000 last week on Wednesday as it became clear that Trump would win. And really the reason for that is Trump on the campaign trail courted the crypto industry, very determinedly. He promised to set up a Bitcoin national reserve. He promised to make the US sort of a center for Bitcoin miners. And he also promised to fire SEC Chair Gary Gensler on day one. And Gensler had essentially led a crackdown for a couple of years on the crypto industry in the US. So crypto advocates are seeing his potential removal or his impending removal as a very positive sign. And that's washing across all sorts of crypto assets, not just Bitcoin. And today we've seen various other digital assets also up quite considerably over the past week. Tokens like Cardano and the meme coin Dogecoin have risen something like 50 or 60%, which is obviously even outstripping Bitcoin. And that already all comes back to this expectation that you're going to have a friendlier landscape in the US. People will be able to experiment with this technology more, and there's just in general less sort of legal jeopardy in what these crypto entrepreneurs are doing.
But Ryan, this is expectation, right? There's no certainty at this point in time. Are investors, are traders potentially getting too far ahead of themselves?
They are potentially getting a little far ahead of themselves. We don't yet know who's going to replace Gary Gensler as the chair of the SEC. Some of the promises that Trump's made, crypto advocates will also have to make sure that those are followed through on. People have raised concerns about the feasibility, for example, of a national Bitcoin reserve already. Those assets are usually the assets that Trump has in mind to use for that reserve are assets that have been seized, and typically those are then used to pay back victims of cybercrime or victims of scams. Former prosecutors have raised doubts as to whether his plan for a Bitcoin reserve is actually feasible. So, certainly people may be getting a little ahead of themselves, but there definitely is cause for optimism for crypto traders, and you're seeing that play out.
Yeah, seeing that right now, too, with the price of Bitcoin. We'll leave it there. Senior editor for Crypto, Ryan Weeks, joining us there on All Things Crypto. Now let's head back to Jumana Bersechi in Azerbaijan now, where the UN Climate Change Conference COP29 kicks off in the capital, Baku. Jumana?
Yeah, that's right, Jennifer. So we were just talking about earlier that this COP is being billed the finance COP because there are lots of negotiations going on around this so-called financing target, which is the amount of money that rich countries will be supplying to some of the developing countries around the world to help with climate mitigation, adaptation, and their transition efforts. So to further the discussion, I'm really happy to say that joining us in Baku, but not exactly where I am, in a different part of COP, is Wasim Tahir. He's a fellow at Harvard's Belfer Center for Science and International Affairs. Great to have you with us, Wasim. I was looking at some of the financing asks, and I thought it was interesting that the IEA estimate that by 2030, $6 trillion of financing is what is required for developing countries. And this is versus annual target of $100 billion that's being set now. It's only ever been met once. How realistic, really, is it that that $6 trillion in financing is actually going to be met?
Hi, Jumana. Pleasure to be here. I think to put that into context, we should do a stock take on the $100 billion target that was committed 10 years ago. And I think three things have become apparent with that target. Firstly, the climate finance from Western governments was meant to be new and additional to the development finance from older budgets, and quite frankly, that's not been the case. A lot of what we've seen in terms of climate finance has been channeled through or drawn from older itself and hasn't been additional. And then secondly, I think there's an issue with currently how we track and count climate finance. So under the real market regime, a lot of the climate finance that's tagged there is actually first and foremost development finance and aimed for development purposes. So just to bring this to life, if you have a road project in Indonesia and it happens to improve flood defences, the climate benefit is incidental or small, but yet the whole deal can be counted as climate finance. So I think if we look at that, I think there's a lot of challenges we still need to work through, and that's what brings me here.
Yeah. So one of the other topics that comes up in the context of financing is the role the private sector are going to play. And I'm hearing this concept of blended finance, where you have public and private participation, perhaps public taking a first loss mechanism so that the private sector feel more enticed to get involved. What is the likelihood that we hear something about this blended finance concept towards the end of COP?
Absolutely. I think blended finance is key. I think using some public concessional funds to mobilise private capital is one of the key tools to really scale up investment. I think the problem with blended finance is it's not the holy grail. It's not the magic bullet, because there's only a limited amount of concessional funds available, and compare that to the amount of financing we need, there's just a big mismatch there. I think that's one of the main issues here.
So much of the financing that has already been put in place has come from the United States, and there's a lot of concern here that the re-election of President Trump could throw the leadership of the U.S. into jeopardy, particularly if President Trump again withdraws the U.S. from that Paris Agreement. What do you think the path looks like should U.S. leadership actually fall behind under a new President Trump administration?
So if you look back to Trump's first presidency, it was under his presidency that OPEC became U.S. Development Finance Corporation and was turbocharged with the amount of investment it could make in emerging economies. So generally speaking, private sector investment and it will still be kind of championed under the Trump presidency. I think the main thing we've got to be concerned about is, will he withdraw completely from the World Bank, the US contribution? I don't think that seems really likely. I think the thing that gets really hit under the Trump presidency is aid programming, grant-based programming, and that's what really gets curtailed under a Republican presidency. But anything to try and mobilize private sector investment, that should still be okay.
Yeah, and let me just round up our conversation asking about a question on China and whether you think they will actually take up the mantle should the U.S. withdraw from this leadership position. There are lots of questions about whether China is classified as a rich country or as a developing country, which is really intrinsic to this discussion about where the financing is going to come from.
True. I think China is already, the world leader on renewables. It's the world's biggest exporter of solar panels, for example, of electric vehicles. And then in terms of its kind of contribution to global climate financing, it's doing that not just through the World Bank, but through the establishment of the AIIB, the Asian Infrastructure Investment Bank, and the BRICS New Development Bank. So I think China's already got a material role in channeling climate finance, and I can see that role only increasing over the coming years.
So interesting. Wasim Tahir, thank you so much for joining us. That was Wasim Tahir, fellow for Harvard's Belfer Center for Science and International Affairs here at Baku. Jennifer, I'll toss it back to you.
Yeah, great conversation there, Jumana. I'm taking it over now. Thank you so much. Now, coming up, after weeks of deadly protests sparked by Mozambique's election results, calm returns to the capital. We have an update next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasadja in Johannesburg. Now, in Mozambique, calm has returned to the capital, Maputo, after police used deadly violence to break up post-election protests. The city's port resumed operations and some public transport was operating on Friday, a day after clashes left at least 5 people dead. For more on this, let's bring in Bloomberg's Andira Oganga, who is joining us from Kigali. So, Andiro, talk to us about how this tension has been playing out over the past few weeks and really how the markets then are reacting.
Jen, following his controversial loss in the presidential election, opposition leader Venancio Mondlane announced that there'll be 4 phases of demonstration, not only against these results, but also the killing of his lawyer. Thursday's demonstrations were the 3rd leg of this protest that he's been leading, and they quickly escalated. We saw 5 people lose their lives, 120 get injured, and the government was forced to step in, deploying the army to try and restore some form of normalcy, peace and calm in the capital city, Maputo. We also saw that there was closure of the land border with South Africa due to tension. And this border is really important because ferrochrome exports from South Africa pass through here. South Africa is the biggest producer of this ferrochrome, and also half of these exports pass through here. And so we saw that this was a problem. We also saw the ports being closed because of security problems with trucks. But a day later, the ports were reopened and trucks are moving again. You mentioned the impact on the markets. Their dollar bonds plunged, but they've steadied. The focus now turns to their $20 billion natural gas project with Total that could face further delays due to the insecurity.
Yeah, and Andiro, I mean, that was really one of the focus points of this election, really what happens with some of these projects. I mean, now that we have seen a little bit of political volatility and a bit of uncertainty, I mean, what is next to pay attention to?
What's coming next is the 4th wave of this protest. The opposition leader announced that they are moving forward with it, and it's going to be extremely painful because the government has used excessive force in trying to calm tension in the country. He says that the economy is going to be affected in a severe way, and we're beginning to see this impact due to closure of the border. The government estimates that they've lost nearly $6 million, and this is a government that has spent a lot of money in fighting insurgencies in Cabo Delgado, and they are also reeling from the weight of debt servicing. S&P has raised concern over their ability to service their debt, particularly their local currency debt, and even cut outlook. But Mondlane is not backing down. He says he wants to be declared the rightful winner of these elections. He wants the government to build 3 million houses for the youth in a period of 5 years. And he also wants 500 million set aside for youthful businesses. For a country that is struggling to even pay their civil servants, this is not going to happen. So the conditionalities are really tough. The government doesn't look like it's ready for dialogue. So tension is bound to continue in Mozambique.
Yeah, paying very close attention to that, as we know you are as well. Bloomberg's Indira Oganga. Thanks so much, Indira, for that updated report. Now, coming up, we take you to Europe, where German Chancellor Olaf Scholz is facing mounting pressure to hold an early election as his government collapses. We are live in Berlin next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Now, German Chancellor Olaf Scholz says he is open to holding a parliamentary confidence vote before Christmas, potentially paving the way for an early election in February. Meanwhile, opposition leader Friedrich Merz, who is currently dominating the polls, has told Stern magazine he would aim to ink deals with Donald Trump. For more, let's bring in Bloomberg's Oliver Crook, who is joining us from Berlin. So, Oliver, I mean, where do things stand at this point in time on this Monday morning?
Yeah, that's right, Jennifer. I mean, it's been a really sort of tumultuous few days for German politics. And what it comes down to now is there's this sort of strange mechanics about how this sort of a referendum and how this vote would come into place. First, you need a no confidence vote in the government, which Olaf Scholz needs to call himself. And basically is coming under exceeding pressure to do that rather than in January, as he had originally laid out, doing it much sooner so that in order to get an actual sort of federal election early next year. These sort of polls are sort of indicating right now that Friedrich Merz, the opposition, would certainly be the number one party in Germany. But the real issue is once we've got all of this timing figured out, you go to the polls, you get everybody to vote, there is no clear path for a coherent German government going by the numbers that we've got right now. If you take a look right now, even if you were to combine the CDU, which is polling well ahead of anybody else, with the AfD, which is, by the way, a combination that would never happen in Germany because the CDU and all the other parties have basically vowed to never work with the AfD, that still doesn't take you to 50%. Could you have a situation where you have the CDU working with Olaf Scholz's party? Is he willing to join a government as a sort of junior partner after having been chancellor? These are all completely open questions, and these polls will certainly shift. But right now, what Germany needs is stability, and there is not a clear path to political stability in Germany.
Yeah, and I mean, there's not, we haven't seen stability in terms of the German economy either, Oliver. I mean, dig into just how potentially precarious this could be in terms of timing for the country.
Yeah, I mean, really at the heart of what's going on in the political problems in Germany is an economic problem, right? And the sort of fundamental disagreements that there were between the different partners of the last government, between the SPD and the Greens and Christian Lindner, the finance minister, who basically refused to have any sort of financial wiggle room in order for Germany to deal with its mounting and increasing economic problems. And Olaf Scholz saying that basically we need to do away with this debt break and be much more flexible in where we're trying to spend money. What could make things even worse for this German government is the fact that now Donald Trump has been elected in the White House. He has vowed tariffs, and that would hit, of all the European countries, Germany the most. He has still not spoken to Donald Trump. Donald Trump has spoken to a number of European leaders, and if you're getting a little bit of indication of how potentially this administration could feel towards Germany and Olaf Scholz, you got it in the sort of tweet, which is maybe what we'll be getting a bit more of, from Elon Musk, in which he said, Olaf ist ein Narr. Olaf is a fool. So that is not particularly a good omen if you're sort of reading the tea leaves and you're sitting here in Germany as to what a new Trump administration could mean for the country.
Wow, that's quite the tweet there. Bloomberg's Oliver Crook. Thanks so much, Oliver, for that update there on things in the country. Now, let's take a quick look at where markets are positioned ahead of the trading day. We did mention it is a U.S. holiday, so we won't see U.S. Treasuries trading, but we are looking at U.S. equity futures right there. S&P futures up just about 0.2%. We're actually seeing a number of a sea of green right now. If we can take a look at equities, that is also as well Euro Stock 50 futures. We're paying close attention to Bitcoin because Bitcoin setting fresh records after we saw that positive momentum coming from Trump's reelection, breaching that $81,000 mark. We'll see whether or not that continues. There on your screen right there is where we're seeing at Bitcoin right now. All right, that is Horizons Middle East and Africa on this Monday morning. I'm Jennifer Zabasaja in Johannesburg. Stick with us for Daybreak Europe. This is Bloomberg.